Hello, thank you for joining. I'm Amit Joshi, Head of Digital Advertising Services at Experian Marketing Services. I'm sat here with Nick Moore, Head of Marketing, and we've debated for a while whether it's risky doing this kind of webinar in the midst of silly season, though we have over 60 of us registered today, so that's not too bad, I guess. So can I just start by setting the scene a little for context? So this webinar is the first in a series, so I'll keep it fairly non-technical, but hopefully what we cover today will at least in part be helpful to all of you. And I just want to call out that we're focusing today on trading desks, which are essentially a buying layer between a brand and the technology platforms used to execute digital advertising, or better known as demand-side platforms or DSPs. I promise that will be one of only a few acronyms today. And I won't be covering publisher trading desks as such, but the themes are generally true for the supply side as much as the demand side. But what I will talk about is the online advertising ecosystem, how it's evolved, where trading desks sit within it, and I'll talk about the key challenges that clients tell me they face today, and importantly, how to make a trading desk relationship work for you. Again, we're talking here from the brand owner's perspective predominantly. We'll finish at the end with some commentary on how the consumer benefits in all this. So let's get started, and here's a view of the advertising ecosystem. I guess what we're showing here is when you're online and you hit refresh, as that page is refreshing or that ad is rendering, there can be up to 50 or so platforms essentially bidding to show you an ad, and this evolution slide talks about how that evolution has come about, really. So let's start with, if you like, traditional online advertising, where you have brands wanting to speak or buy media on said media owner sites, and a media owner wants to sell its advertising space to the brand to generate its media revenue, essentially. Of course, we know that agencies represent brands in the main, and networks have been representing media owners. So I guess the job of or role of the agency is to work on behalf of its brands to go and buy media space or advertising space cost effectively, and media owners, again, we're working through networks to drive as high a yield as they can get. So this, I guess, this format of advertising or direct media buying is based on what we call pre-guaranteed media buying. So a particular brand or an agency representing the brand may say to a media portal owner, and we want to buy all the MPUs or the banners on the homepage of your site for the month of December. What's the cost per 1,000, and how many ads essentially can I get for that? For the budget that I'm telling you I've got. So essentially, this was how advertising was bought and sold. It was done by using content as a proxy for audience. So the reason why you might want to buy an ad on Guardian or eBay or MSN is because the audience on these particular partners tell you that this audience over-index for the types of products that I, as a brand, want to buy or sell. Sell product or services the brand wants to sell. I guess we're moving along. What's happened recently, and I say recently, probably the last 8 to 10 years, is that the pace of change within advertising has been unprecedented, really. This has largely been driven by the automation of advertising, or otherwise known as programmatic advertising. So if we think back to how the financial stock markets changed, you often have traders on a trading floor with their phone glued to each ear, and they're buying and selling at a given price. That then changed, and if you see financial trading floors now, you've got essentially mathematicians sitting in front of very large screens, and they're using algorithms to bid and place orders for stock or inventory. And in a very similar way, in digital advertising, the ad exchanges have come about as this way of automating the buying and selling of media, and it's done via an online auction. So the highest bidder, so the brand who bids the highest to show a consumer an ad, wins the right to show that consumer an ad in real time. Some might say that's democratization of media trading. So essentially leveling out the playing field between large and small buyers, and giving smaller publishers an opportunity to sell to a wider pool of brands. And that's been done predominantly by cookies, enabling buyers to make a bid on a user in real time based largely on that individual cookie's behavioral browsing data. So it's essentially identifying an audience now rather than the content upon which that user, that consumer has arrived, as per our first slide. So I guess we've had this automation, this ad exchange, this online auction, and to support that we've seen SSPs, supply-side platforms, operating on behalf of media owners to again automate how media is sold into this ad exchange, ready for buyers to buy via their demand-side platform. So the DSPs essentially it is an automated media buying platform to help bid and buy intelligently via this ad exchange, which sits in the middle. And ultimately, this is all about serving the right ad to the right user in the most effective manner. Moving this evolution on one more step, you have trading desks who enter the mix. Now, this is an additional layer to help support this buying process. Now, different trading desks offer, different value adds, but often it's a blend of proprietary technology, proprietary data. It could be linkage capability between first and third-party data, or simply operational know-how. So we have a team who know how to deploy budget across multiple DSPs and multiple platforms, so we can add an additional level of insight to make that advertising more effective. So I guess what we're saying then essentially is that the trading desk sits the layer between the brand and the media buying platforms or DSPs, and helps to seek to refine even further how you can show the right ad to an existing customer or a predefined prospect at the most appropriate time. Or that could be using day parting, so better to serve an ad on an evening or a weekend for a particular product or service, and then of course across a choice of devices. I guess the final player joining this party are data management platforms, which essentially are hoovering and managing data from each of these partners, and then using that data to create even more actionable insights. So both the SSPs and both the DSPs can trade with that media. But that's what I'm going to say for DMPs today. It's a connected but separate topic as far as these sessions go, and we'll be having a webinar on DMP specifically. So there's the evolution. This is where trading desks sit within it, but it's never quite as simple as it sounds, really, is it? So what I wanted to do is look at focusing on the challenges that brands are facing today. So when I'm out myself, and my team's out meeting with Experian clients, I hear a lot of challenges when it comes to their, I guess, varying exposure to programmatic advertising. Some are early adopters and are quite sophisticated in approach, and others are still getting started. But I hear it's a challenging process at the best of times, and one that often isn't easy to crack overnight. But each brand has challenges unique to them and their industry, and we fully acknowledge that. But over the years, what we have done is we've learned to group some of these challenges into a number of distinct types or groups. So I guess I've called out the three key challenges that we see. as a business. I guess challenge number one is about, okay, well, we want to get involved with programmatic advertising and make our advertising more efficient. And one route to that is going in and licensing technology directly. I guess the challenge here though is how do you choose which DSP technology to work with? So I guess if you're embarking on that process for the first time, there are a number of things that brands need to consider. So we hear uncertainty around whether you take a license on a SaaS basis or you take out a managed service. I guess with this you need to decide how much control you're prepared to cede. You need to check you have the necessary legal support, in-house or external to negotiate these licenses. Because if, as a brand, you have a global presence, then your campaigns will, if not now, but certainly in future, need to be deployed across multiple markets, all with their own tolerances to liability, and you have to plan for the eventuality or risk that data or advertising is compromised. So I guess contracting correctly and having the right legal support is something that needs to be understood. I guess then if you decide whether you want to take a SaaS license out, then if you want to be pulling those levers on a self-service basis, you need to have the skill set in-house, to manage those ad operations on a day-to-day basis. Or at the very least, if you're taking out a managed service license, then having a person in-house that understands how to manage these relationships and these partnerships with these tech vendors. So I guess whichever way you approach it, it can be quite a resource and cost-heavy project to embark on, especially as you factor in the learning curve. Now, I guess challenge number two, in addition to which technology we choose, is okay. Well, once we've got the technology, how do we then deploy all the data we've got so we can, get the best use from it? Now, I guess over the years, what we found is brands are willing and want to activate their first-party data. Brands want to gain insight on who their customer base is, how those customers have changed over time. For example, whether their offline buyers are different to their online buyers, but importantly, how many of those you can reach and how many of those you can convert and drive revenue from. So once that view is clear about how you're able to activate your first-party data, you're going to want to be able to segment those audiences by value. So let's say high, mid, and low-value customers, and then we're talking about how do you link those audiences to various channels for execution. So I guess the challenge is, although there is a willingness to activate first-party data, the hesitancy is still there around who you share that data with and what happens with it further down the line. So that's, I guess, challenge number two. It's okay. We've had the data, we've chosen our technology vendor, and how that's going to, how we're going to use that technology. We now want to look at how we power that technology with the data. I guess the challenge number three that we hear a lot is around transparency. So we're not just talking about transparency with regards to fees, but also to approach and measurement. So brands want much more information about what's driven the success of a campaign and want to know how any insight might be distributed from one campaign to another, or from one channel to another channel in the future, should they need to move partners. I guess that's something that comes up time and time again with brands. And I guess from our view, although there appears to be less black box approach from the ad tech industry, I still think there is and clients tell us there is still a lack of information exchange, which hinders how brands can participate really, given they have more industry-specific insight than anybody. So that really should be shared if there is more of an open exchange of information. I touched upon fees, and of course brands want to avoid paying high and non-transparent fees. But I guess where the topic of fees comes up more often than not is when so-called double dipping is apparent, and that's essentially when a brand is paying its agency for fees, and then it pays its agency's trading desk its fees. And that's all over and above indirect DSP platform fees. So paying twice, whether you're working with a independent trading desk or you're working with an agency's trading desk, paying twice is never fun. So I guess they're the three challenges that we see really. It's around technology, data anxiety, and the lack of transparency really in the market. So let's just have a quick checkpoint here, about what is a trading desk. So we know a trading desk sits as a layer between a brand and this programmatic buying systems that are out there. Trading desks can offer unique things, but generally they're a blend of proprietary data, proprietary technology, or proprietary know-how or methodology on how to deploy online advertising budget. So we talked a bit about the challenges. Let's now move to I guess how we can take some practical steps towards making a trading desk work for you as a brand. So I guess this is all about adding real value, and whether this is in terms of being platform agnostic, being data-centric, or transparent in approach. Hopefully all three, but if not, then all three at least. A trading desk should excel in one or two of these aspects. What I'll do is I'll take each of these in point and then try and decode and offer some advice based on how we Experian certainly see it. So I guess firstly, it's advised that you identify if your trading desk is truly platform agnostic. I guess you should be asking which platforms are integrated and why, and whether one platform may be better suited to your particular campaign or objective over another. Often you find trading desks are aligned with only one platform, which may not be the best suited platform for your needs, because each campaign will have a different strategy and unique tactics. At Experian's own trading desk, when we run campaigns on a managed service basis, we license between 7 to 10 platforms at any one time, and we frequently deploy client budget across 2 or more platforms if the needs of the brief demand it. And this isn't about using all of this capability just because you can, but it's about identifying your, say, video needs alongside your display needs, or using a platform which is stronger in emerging markets like China, for example, versus Europe, or choosing one that can provide the most reach linked to persistent device IDs. And these are just some of the reasons, and there is a longer list. But I guess identifying which platform your trading desk is connected to is going to be one of the key factors we believe in getting success if you have a lot of variety in the campaigns that you deliver. Certainly, if you deliver them across channels, markets, etc. And it wouldn't be practical for a single brand to take out multiple licenses with DSP. So your trading desk should help perform that function, along the way filter out what works best and what does not work best, really. So I guess a final point here just around being platform agnostic I would make is with regard to reporting. A multi-platform approach is great, but that shouldn't become too onerous when it comes to unifying reports from 2 or 3 platforms. We all want to get to a position where you can uniquely identify a single audience across multiple platforms and dedupe for frequency capping. Ultimately, the aim here is to then play back performance in one single report. Brands are should leverage a multi-platform approach, but ultimately the focus should be around what the key objectives are for a brand, and the methodology should really be something that your trading desk should take care of. But it's worth identifying whether the trading desk that you want to work with has has that capability. Secondly, I would investigate around how data-centric your trading desk is. So while tech plays a major role, we believe, Experian believes, cutting the data creatively and then linking it at scale is really what determines success, and increasingly so. So when we talk about data, and when we apply this within a media trading environment, it should meet three broad objectives. Firstly, accuracy and relevancy. If you take Experian's database in the UK as an example, we have data on 51 million consumers, and on average we have around about 500 variables on each of these consumers. Now, this data covers consumers' lifestyle, life stage, and characteristics, and it's real data on real people. But to make this relevant for a campaign, you need to ensure that you're understanding what the dominant characteristics are. There's no point over baking something that isn't needed. So I guess for us it's around creating dominant characteristics, and then once established we can start to create a lookalike model for prospecting that will then itself be accurate and relevant. So I guess you've got to start from a position where your data is accurate and it's relevant. I guess the second point around being data-centric is linkage. So make sure that you're providing sufficient enough reach. We still talk today of reach as the percentage of the targetable audience or universe that we could reach, which sounds great because it generally ends up being a much larger number. But we talk a lot less about RTB win rates and how many we realistically will reach. So an example here might be linking your customer base to a cookie, or to cookies, which we see will yield a typical 35% match rate once your data has been matched and then pushed from one platform to another and ready to be targeted. Which still sounds okay, right? And if you've got 1 million customers in the UK and you can reach, or you're told you can reach 1/3 of them in any given month, that's not bad. But in reality, if we take another look and check that the DSP bidder can only win, say, 20% of bids in that online auction that we talked about earlier, then essentially, your reach against a known audience is actually more like, using this example, 7%. So I guess the question, brands, you should ask yourselves is whether that's a sufficient enough number to A, justify the cost of linking data, and then B, whether that 7% of your customer base you served an ad to in a given month are going to drive the conversions that you need to deliver that return on your ad spend. And it may well be the case that it is, depending on the product or service that you offer, but for many it certainly won't be. So I guess activating data is important, but we've got to be mindful of whom and how we link, and ensure the trading desk can support linkage across not just cookies, but device IDs, email addresses, and other persistent mechanisms. And of course geolocation, which is something that Experian would do quite well. So I guess you've got to have a range of linkage opportunities to really reach your audience in the right way. I guess the final point I'll make around being data-centric is if you've got accurate data and you've linked it well and you can create unique audiences and prove that you've driven engagement with those audiences, that in itself is a great way to prove incrementality. And I guess incrementality is a topic that comes up in almost every conversation that we have now with our clients. And that's essentially, how can you drive incremental uplift? How can you drive incremental performance? How can we prove that the spend that we're committing with you or your platform essentially is going to drive us value? So data can play a big part in that, and I think that's a conversation that should be had with your trading desk. Thirdly, transparency. We talked about it earlier. Transparency it's around transparency in your approach, but also transparency to fees. I guess for marketers and brands, we all want to avoid paying high and non-transparent fees. But let me just say that fees are, of course, necessary. They pay for consistent levels of service. They cover technology and operational costs. They cover innovation and future. And actually, it gives you back the time to do the things that are core to your business strategy by essentially outsourcing the task of of your media buying. However, fees can mask a lot more than essential expenditure or a fair or competitive level of reward. So, I guess if there is double dipping, as we mentioned earlier, then you've got to be you've got to have those upfront discussions around where that media budget is going, and if you find only 40 or 45p in the pound is left to spend on media and data and targeting, then it means your budget needs to work much harder, which make those CPA goals in a DR world much more difficult to reach. But these are conversations you shouldn't be afraid to have with your trading desk, and it should be documented how fees are going to be constructed. So I guess what we've talked then about what a trading desk is, where it sits within the ecosystem, some of the challenges that key challenges that brands face, and how we can help, how trading desks can help support some of those challenges. We should also always have an eye on how it benefits the consumer. In the modern world, as brands, you have to think of the consumer first. As we know all too well, consumers vote with their feet, and it's incumbent on brands to deliver accurate, relevant, and seamless experiences. And as every marketer now appreciates, the customer expects great service. In fact, they demand it. And this extends to the messages you place in front of them in the digital environment as much as in the offline world. So every touch point is part of the customer journey. So even if it's pure acquisition activity you're running, it's crucial that the first message a customer receives is relevant and tailored. So, I guess, if you focus on the consumer and how the consumer benefits, ultimately your messaging will become more relevant. You'll end up protecting your brand along the way just by using simple suppressions. For example, if you're a credit card company and you only then to a certain profile of consumer, then you should be filtering out and you should be suppressing those consumers straight away. So the ads are always going to be more relevant. In turn, that will reduce what some consumers may seem like spam, and overall you end up with a responsible approach to marketing, which essentially means that if you can create accurate data and you can join that up across platforms, the more expertise a brand has access to via a trading desk, then the more responsible ultimately you can be. So I guess in summary then, what we've learned, or I hope we've learned today is where trading desks sit in the ecosystem, the challenges that key challenges brands face, what advice is there to make your trading desk relationship work, whether you have one or you're currently seeking out support of a trading desk, and ultimately if you focus on the consumer, that will always help your image and brand in the market. So I want to just thank everybody for the time listening, and any questions that have come through, we will tackle these and respond to them directly. Thank you very much.